as much as I hate politics, we got to talk about the election, not who wins or loses, but the impact of the actual race on the stock market, because there'd be a lot of money that could be made. Remember, a few weeks ago, it felt like the race was over and former President Trump was a shoo-in after President Biden's distinctly suboptimal debate performance. That outcome seemed even more likely after the horrific assassination attempt on Trump. But on the 21st, Biden dropped out of the race, with Vice President Harris becoming the de facto Democratic nominee. And when you look at the polling, suddenly we've got a close race. Putting aside the polling, what really matters are the expectations, because Wall Street's an expectations machine, right? Take this betting data from Predicted, a site where people can wager on political events. In the days after the assassination attempt on Trump and during the Republican National Convention, bettors were giving Trump victory odds as high as 69%. Harris's entry into the race has changed everything. According to the latest predicted data, it's now basically a dead heat. So what does a close presidential race mean for the stock market? Simple. In a highly contested election, I think there's a big opportunity to make some money in shares of select media companies, which could make out like bandits as Americans follow the race and both candidates spend fortunes on advertising. Take Fox Corp, the parent company of Fox News, the preferred media channel of the GOP and the dominant cable news network. Back in April, I put Fox Corp at the top of my media power rankings precisely because this is an election year, and the stock's up 22%. Since then, drastically outperforming the other major media names, not to mention the S&P 500. There's no need to overthink this one, people. In this new, very challenging cable media landscape, where cord cutting is still a big problem, the most durable properties are things that need to be watched live. Mostly that means sports, but lucky for me, it's also news. Fox Corp has a strong position in both. It has extensive college and NFL rights with football season just around the corner. And I bet Fox News will pull plenty of viewers in the 3 months leading to the election, possibly for much longer than that if the results are contested, like last time. Now, Fox Corp's reports next week, and look, I expect a good quarter. Keep in mind that it's the second quarter, and my call here is mainly about the second half of the year. Next up, the New York Times Company. Although I'd actually feel better about this one in the event that Trump wins, even though the Times dislikes Trump, some people say, and Trump dislikes them right back. No, everyone says. When you're a media company with any kind of political angle, your business does better when your core readers hate the President of the United States. Hey, look, same reason I think Fox probably performs better if Harris wins. Look at the performance of the stock in the New York Times over the past 8 years. This stock did nothing in the final years of the Obama administration. Actually fell 16% from the end of 2013 to the end of 2016. Then it soared during the Trump year. From Election Day 2016 until Biden's inauguration in January 2021, the New York Times rallied 338%. More than quadrupling what you would have made with the S&P 500 during that period. But since Biden took over, Time's up only 9%. Again, don't overthink this. Love him or hate him. It was tough to take your eyes away from Washington when Trump was in power. He was a great driver of subscriptions for the New York Times. From 2016 to 2020, the company's subscriber base increased at a 42% compound annual growth rate. 42. In the first 3 years of the Biden administration, that slowed to an 11% compound annual growth rate. Not so hot. Of course, much of the recent growth has come from people lured in by New York Times' games, like Wordle. That's the growth driver now, while actual reading of news is basically flat. Do not bother my wife when she is playing Wordle. The day never recovers if you do. There's nothing wrong with having a successful games franchise, but more engagement with the news would certainly be a positive for the business. And that's why I'm betting a close election helps, as would a disputed election or maybe another Trump presidency. Finally, there's one media stock I am really excited about. I see it as a close, really big winner from a close election. And that's a company called Nexstar Media Group. I've mentioned it a couple times already, but yeah, you probably haven't heard of it. That's because it's the largest local broadcast television player in the country, with 200 owned or partner stations, 116 markets, 220 million people they reach, for heaven's sake. They also own a couple of national television properties, including the CW and News Nation, plus a portfolio of digital assets from its local TV station websites to The Hill and NewsNationNow.com. Collectively, they make Nexstar a top 10 U.S. digital news property. What's so great about local news? Look, as we get into the heart of election season, both major party presidential campaigns, all of the down-ballot candidates, and all of the supersized political action committees that support them will be flooding the airwaves with political ads. Local TV is just a great way to target that spending. Just yesterday, the Harris campaign announced a $50 million ad buy ahead of the Democratic National Convention next month. While these are ad dollars, they're going to a lot of different designations, much of them digital. A substantial part, big portion, will go to local media. like the TV stations owned by Nexstar. And Nexstar is a small enough company that this influx of ad dollars has the potential to move the needle, especially because Nexstar owns a whole lot of stations in the big battleground states that both campaigns are fighting over. Oh, they're going to pour the money into that. One big caveat. Nexstar is more of a trade than an investment. While the stock's been a solid long-term performer, up almost 300% over the past decade, I'm really only interested in this one for the campaign spending thesis, because afterwards, some of the secular challenges for old-school TV will come right back into play. Look at it this way. Wall Street expects Nexstar to deliver $5.55 billion in revenue this year and $25.36 per share in earnings. But the analysts see that falling to $5.12 billion in revenue next year and merely $16.41 per share in earnings. My view. I think you can make hay while the sun shines on Nexstar this year, as the company could still surprise to the upside for the next couple of quarters on the strength of much higher than expected political ad spending, now that we've got a genuine race on our hands. So here's the bottom line. As much as I really do loathe talking politics on the show, I think the suddenly close election gives you an opportunity to try to profit from some of the media stocks that are about to be inundated with both viewers and political ad dollars during the campaign. Specifically, I like Fox Corp, the New York Times, and Nexstar. Though the latter only works as a trade, not as an investment. Boy, it should be a darn good trade. Jason in Florida. Jason.
Hey, Jim. Big ups and a whole lot of respect from down here in Naples, Florida. Thanks for having me back.
Oh, thank you, boss. I appreciate that. How can I help you?
Hey, my question for you today, Jim, is what can we expect from Netflix this quarter?
All right, so I thought that Netflix, I mean, this is a tough one, Jason. I'll tell you why. I thought Netflix had a great quarter. I really did. I always write down which shows they recommend. They always have some really good ideas. They like all that British stuff lately, and whatever's that. But I will tell you that the market didn't like it. And so I'm kind of not the call here. I thought it was a terrific quarter, and I would stick with it, but the market didn't like it. So therefore, it was very confusing to me. I like that company very much. Let's go to Philip in North Carolina. Philip.
Hi, Jim. How you doing today?
I had an okay day. Philip, I was a little busy. How about you?
I'm doing okay. Fair to middling, as they say down here. Fair to middling.
Yeah, I say that up here, too.
And since I just finished watching the Yankees smack around the Phillies for 3 days, it makes me even feel even better.
Yeah, okay, so what's your stock? Because I'm going to tell you, I don't really like it.
Okay. All right. Given the state with Paramount, what is going on as far as the stock and
I'll tell you the truth. Even though you said that, and I stayed up late to watch last night's overtime, the extra innings fiasco, that one's done. You got to sell that one. You got to ring the register. There was some bogus rumor today about something happened. You've made all the money you're going to make in PARA, Philip. So I would take the money and run. Anyway, I think this election season gives you an opportunity to try to profit from some media stocks. As of now, Fox Corp, the New York Times, and Nexstar are the ones that have my vote. There's much more mad money ahead, including my exclusive with UL Solutions. This safety science company, this is why I love the stock market. It just beat on its second quarter of earnings as a public company. I'm finding out if the stock should be certified for your portfolio. This is the kind of stock, a lot of people don't know this company, and they ought to. And then what's benefiting from the generative AI boom that's now sinking? I don't know. After tonight, maybe it comes right back up. I'm going to give you my ROI on the companies that get business from AI. A lot of abbreviations coming up. And all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.